navigating the consumer confidence recovery and strategic merchandising opportunities. The latest consumer confidence data presents a complex but ultimately promising landscape for both retail and CPG category managers heading into the critical late summer selling season and the fall planning cycle. Bottom line is that consumer sentiment has reached a 5-month high in July 2025, but inflation expectations remain elevated, creating a unique opportunity for strategic positioning around value, quality, and consumer reassurance. Consumer sentiment has shown encouraging improvement, with the University of Michigan's Consumer Sentiment Index climbing to 68.1 in July, up from 60.7 in June, and marking the highest reading in 5 months. This uptick follows months of decline that had pushed the confidence near historic lows, with the index still sitting 16% below December 2024 levels, but trending in the right direction, finally. The key driver behind this improvement is a notable decline in inflation expectation. Year-ahead inflation expectations dropped from 5.0% in June to 4.4% in July, representing the lowest reading since February 2025. Long-run inflation expectations also fell to 3.6% from 4% the previous month. This easing of inflation fears provides critical breathing room for households that have been grappling with the elevated prices throughout the year. But the picture isn't entirely rosy. The Conference Board's Consumer Confidence Index deteriorated by 5.4% in June to 93.0, with particular weaknesses in the Expectation Index falling to 69.0. Now, that's substantially below the 80 threshold that typically signals recession concerns. These mixed signals suggest consumers remain cautious despite some improvement in their near-term outlook. One factor continuing to temper confidence is the ongoing uncertainties around trade policy. Despite recent trade deals, tariffs remain a top concern for consumers, ranking second only to inflation, according to McKinsey's ConsumerWise research. Importantly, 91% of U.S. consumers report being engaged with tariff-related news, and many are adjusting spending habits in response to potential policy changes. Consumers are more aware and perhaps feel involved in this issue more than one would suspect. This presents both risk and opportunity for category managers. While trade uncertainties may continue to dampen overall sentiment, it's also driving consumers to focus more intently on value propositions and domestic alternatives, trends that savvy retailers can capitalize on. The consumer confidence recovery isn't uniform across demographic groups. McKinsey data reveals distinct patterns that should inform merchandising strategies. Baby boomers are maintaining traditional purchasing patterns despite inflation concerns, with only 20% reporting intentions to splurge in first quarter 2025. Now, this suggests focusing on premium, more familiar brands, and products that align with established preferences. Millennials are more actively trading down, adjusting quantities and pack sizes to manage costs. This demographic represents the biggest opportunity for private label positioning and multi-pack value offers. Generation Z consumers are experiencing particular financial strain, with fewer reporting income gains and more dipping into savings. Value-oriented messaging and accessible price points will be critical for capturing this segment. So, what should you do now? Well, capitalize on cautious optimism. With inflation expectations cooling but still elevated, lead with clear value messaging. Prominently display per unit pricing, bulk savings, and comparison charts that help consumers feel confident that they're making smart financial decisions. Given demographic spending variations, ensure robust good, better, best product assortments. Stock premium options for those boomers who are maintaining spending patterns while expanding private label and value offerings for those price-sensitive segments. Consumer purchasing plans for cars reached their highest level since December 2024, while home purchasing plans declined. This suggests potential for automotive related categories like car care and travel accessories, while being cautious on home improvement inventory levels. This fall, prepare for holiday uncertainty. Start holiday value messaging earlier than typical, with 43% of consumers citing rising prices as their top concern. Early bird specials and layaway programs could capture budget conscious shoppers who are planning ahead. Consumer intentions to purchase services weakened compared to goods in recent months. This shift suggests that opportunities in physical products over experiential offerings for this holiday gifting. Even high-income households are trading down packaged foods, creating opportunities for private label expansions and value pack offerings. McKinsey found 51% of low-income households traded down on meat and dairy. It's time to position alternative proteins and value options in prominent locations. Brands and retailers need to emphasize stability and reliability in these uncertain times. Avoid overly promotional language that might suggest desperation, like buy now before the tariffs increase prices. Instead, focus on trusted value and proven quality messages that build confidence. Plan for more conservative fall promotional strategies that emphasize genuine savings rather than excitement-driven purchases. Retailers should leverage online platforms for price comparison tools and value calculators that can help consumers feel informed and confident about their purchasing decisions. The consumer confidence recovery, while modest, does create a window of opportunity for thoughtful category management. The key is positioning your category as smart choices for uncertain times, offering genuine value, clear benefits, and the reassurance that consumers are making wise decisions with their hard-earned dollars.